What is going on, my friend? I'm back here with another weekly portfolio update. And as you can see here, the value has gone up, of course, because I have been investing this cash I have in here, slowly dollar cost averaging into the market. I plan on having all of this invested before the end of January. So as you can see, I have a pending buy here of 271.98. I kind of did the math here. I think I'm correct. Let me search for the calculator here. Calculator. I want to just slowly dollar cost average this in the month of January, and I think I have 5 trades left. So, or 4 trades, I think. So, what is my amount here? 1357. So 1357 divided by, I think I have 4 trades left, if I'm not mistaken. Or no, I have 5 trades left. No, I have 5 trades left. So it averages out to be around 271 per day that I'm going to be buying into this portfolio. And today I want to show you guys, as you can see, I'm down for this past week, 0.55%. It was minus $20.92. But as you can see, apparently there's a credit for some dividends, earned dividends of 305 this week. But I think those have not quite gotten to the account yet. I'm not sure, but yeah, as you can see, I'm down 0.55, and if you check the S&P 500, it's down 0.8% for its 5 days. So far, I did beat the S&P 500 for that week, so that's a win. So I want to show you guys real quick what I have in each pie. Okay, so I call this one my aggressive dividend because these have a little bit more higher yield, so they're a little bit more aggressive versus my conservative pie. So as you can see here, on the right hand side is my allocation. So this bold letter is the target. This is the actual percent of funds that are dedicated to this company right now. And the reason why it's off is because I got a little excited early on before I started making videos, and I bought like $250 worth of Wyndham Hotel, and then I bought some extra Boeing and some extra Texas Instruments. So it kind of threw my allocation off, but now I'm just kind of letting it rebalance on its own. And one thing I love about M1 Finance is that whenever you buy, it'll always buy into the lowest percent allocation first. So I'll show you what I mean by that. If I view the details here, as you can see, look, this is low. Microsoft, APD, Apple, SPG, Procter & Gamble, all these are low, right? So if you go into my buys real quick, let me show you. If you go into my buys, as you can see here, it's going to buy Microsoft, APD, Apple, everything that's low in the allocation, which is pretty awesome. I don't have to really worry about that. M1 Finance does the whole thing. So back into the companies that I have here. As you can see, I did up my percent on Microsoft to 14%. I just love everything that they're doing with the carbon-free initiative and just the company as a whole. They seem to be going onward and upwards according to my due diligence. APD, I up their percentage. I up Apple, and I think that's pretty much it when it comes to as far as my allocation change and the things that I decreased to increase these percentages is Boeing. Boeing was at, I think, 3%, and I also lowered the Bank of Nova Scotia to 2%, mainly because Bank of Nova Scotia they haven't been growing their dividends. They've been kind of cutting it and then putting it up, cutting it and putting it up. So I just put it to a lower allocation because they are still paying a nice quality dividend, but they're just not growing their dividend. So but let's continue down the list. So I have Apple, of course, a high quality company. SPG. If you guys don't know SPG, it's so funny. Whenever I lived in California, their malls were everywhere, and they're just so freaking awesome. This is another REIT. This is a real estate investment trust stock. Seems to be pretty. Let's check the chart here. I can check the chart. Oh no, this is just the chart as far as what's been going on in my portfolio. But as you can see, it has a pretty pretty substantial dividend yield, 5.8%. The price to earning ratio is 19.8, which is below the average, which is pretty sweet, and they have a pretty decent market cap. As you can see, I only own 0.97 shares, and I'm at an average price of 144. Let's go back here. Let's go through some more companies that I have. I got Texas Instruments, Procter & Gamble, Johnson & Johnson. I work in healthcare, so J&J is going to be in my portfolio. They are just so well diversified. McDonald's, I do not eat McDonald's, but a McDonald's as a business is booming. Bank of Nova Scotia, Prologis, Crown Castle International, QCOM, Qualcomm Incorporated, and Broadcom. I don't know. So that is what's in my aggressive pie. And let's go check out my conservative pie. And before I do that, as you can see, I did add some treasury bonds in here to kind of balance out the portfolio. It was really aggressive, so I decided to put like a safety net in here to kind of protect against the potential downturn of the market. So in my conservative here, as you can see, let's go the targets here. I got Bank of America, Caterpillar, Cisco, Intel, which has been booming since their earnings recently this past week, Pepsi, Pfizer, Wells Fargo, and I just recently added Visa. This was not on there last week, so I added 6% to Visa, and I dropped Toyota Motor a lot. This was at 13%. I dropped it to 3%, just because they pay out their dividends semi-annually, so twice a year. So I just want to have that less in my portfolio. I would rather have companies that pay out either quarterly or monthly, but they still pay, which is awesome. And I'm really freaking stoked about Visa. I may up this percent even more and put Toyota down to 1%, maybe at some point in the future, because they just bought Plaid. And if you don't know what Plaid is, I'm pretty sure you've used it but don't know what they do. Whenever you try to link your bank account to any app, you have to put your username and password, and it connects you to your banking service. Plaid is the one that offers that service. Freaking awesome, right? So Visa just bought them, so they'll have access to a lot more data. And the bonds here. Let's go ahead and show you here what I added to the portfolio. 10% of the portfolio is bonds. We have treasury bonds, short-term treasury bonds, 1 to 3 year, midterm, 3 to 7 years, and then some corporate bonds right here. And I mean, they seem to just always stay steady or go up at a very slow rate, which I'm completely okay with. 10% of my profile going there, which is I'm super stoked about. So everything is looking on the up and up. And as you can see, all time so far, apparently I have earned $5.08 in dividends. Now, if you go to the activities, it doesn't show it here. So my guess is that the company has declared its dividends, and they just haven't. The payout date hasn't kind of come up yet, but it's going to automatically be into my account whenever the payday comes. So they just put that there, so I guess dividends are coming in. So $5.08 is coming so far I don't know which month it's going to happen. So I think it's going to be in February. So I probably won't have any dividend payouts for this account in the month of January, which I'm okay with because I just started it. And that's pretty much it as far as the portfolio update. Like I said, guys, I'm going to be updating you on this journey, updating you weekly, every Monday on the account, the dividends. I am funding this account as much and as often as possible. And just for shits and giggles, I'm going to show you this real quick. So if we take this account right now, sitting at where it's at, 4470.88 or 80, wherever that's at, right? So we'll say, because I really ain't contributed $5,000. So let's say $5,000 at the beginning of January. Right now, my investment into this account is around $600 per month, right? So, and the average dividend growth rate for my portfolio, I checked through all the companies, is at around 7% per year with all the companies averaged up. I have an app that kind of tracks that. So, assume dividend yield. My dividend yield is actually for this account is like 3.9%. And right now I'm 29 years old. So let's say I want to do this for 15 years. Let's just say 15 years. This is my personal account. This is not my Roth IRA. So this is taken into account if I want to start taking this money out. And inflation right now is averaging at around 3.3%. And let's say assume growth rate of the share price every year. Let's say it goes up an average of 6% in my portfolio. This is going to be so awesome, guys. And then for my current age is going to be 29. All right, let's calculate. Now, this is the beautiful thing. So at 29, at the end of this year, hypothetically speaking, if I continue with this amount at $600 a month, which is for me $30 a day, I'm putting in, I think 30 bucks a day. Is that about right? Yep. 12,000, 21,000, and then let's say at the end of 15 years. So at the end of 15 years, 2035, the account potentially could be worth 286,000. Now, inflation adjusted dividend payout in today's dollar would be average around $7,230, but the actual annual dividend payment will be around $12,155. So my dividend growth rate is beating inflation, which is freaking awesome. So at 44 years old, if I wanted to, I can start taking this money out, paying bills with it, paying for trips, doing whatever I want to with that money. 12,155. If I do that, the calculator app. Let's go here and just see what that is. An average per month, 12,155. Divide that by 12. That's an average of that's $1,000 a month, which is pretty sweet. $1,000 per month to do with as I please. And this is me not reinvesting, and it's still growing because I'll still be contributing, right? Still be contributing, and it's just growing and growing and growing and growing and growing and growing and growing, right? And this is just one of my accounts. I have an individual account and a Roth IRA. So I plan on contributing as much and as often as possible. So this is not to show off or do anything. This is just to expose you to what is possible. No one told me about this when I was 20, 21, 22. They told me at 23, but I still had that quick, instant gratification mindset to make a quick buck, and I'm 29 already, and that quick buck did not come. Okay, so plan out for the long term. It's okay to have your short term, your short term gains, but have something going for you passively for the long term. So if you guys like this video, go ahead and smash the like button. I think it helps with YouTube and stuff. I'm not sure, to get people to view it and get exposed to this type of investing and learning. And share with a buddy, and drop a comment if you have any questions. What are you investing in? If you see anything that I can improve on, let me know. But I look forward to sharing with you next week's growth and contribution. So blessings to you. Later.